Assalamu alaikum. Good evening, everyone. I'm Mehnaz Fatema, ID 22171. Welcome you all to our presentation. One of the hardest and biggest accounting issues whatsoever is the question when and how to recognize the revenue. In 2014, there was a huge change in IFRS related to the revenue recognition guidance. Before the change, the guidance was spread all over the standards. It was difficult to specify what standard to choose to recognize the revenue in your specific situation. It was confusing and conflicting. Then IASB and FASB worked together regarding this and came up with a combined standard, which is a totally new revenue standard named IFRS 15. You may be wondering about the relationship of IASB and FASB. IASB is International Accounting Standards Board focusing on international level standards of accounting, whereas FASB focuses mainly on setting standard and rules for accounting firms and individual certified public accountants practicing in United States. So both IASB and FASB collaborated to set IFRS 15, and this is applicable from 1st January of 2018. Moving on to the next slide. A compliance study of IFRS 15 on the cement industry of Bangladesh. Introducing you to our topic. As I said before, we apply IFRS 15 only in the cases of contract with customers, not with other related parties. This is why we know IFRS 15 is all about revenue from contracts with customers. An entity shall apply IFRS 15 to report useful information to users of financial standards about the nature, amount, timing, and uncertainty of revenue and cash flows arising from contract with customers. And so it is very, very important for companies who run long-term contracts and complex transactions. And as we know, the cement industry is one of them who run the complex transactions. Moving on to the next slide. That was the introduction to our topic, and now I am introducing you to our other team members who will continue the presentation further. Thank you, everyone. Moving on.
Assalamu alaikum. I'm Rony Sarker. My ID is 23052. Today, I'm going to discuss about the background of IFRS 15, the issuance of IFRS 15, and the replacement of several international accounting standards by IFRS 15. First of all, IFRS 15 is a guideline for revenue recognition from contracts with customers. It was adopted by the International Accounting Standards Board in 2014 and came into effect in 1st January 2018. It was a joint project of Financial Reporting Standards Board and International Accounting Standards Board. It was introduced to develop a high-quality global accounting standard for revenue recognition. Now, the issuance of IFRS 15. In May 2014, ISB issued IFRS 15 together with the introduction of topic 606 into the Financial Accounting Standards Board's Accounting Standards Codification. In September 2015, the board issued effective date of IFRS 15, which deferred the mandatory effective date of IFRS 15 to 1st January 2018. In April 2016, the board issued clarifications to IFRS 15 revenue from contracts with customers, clarifying the board's intentions when developing some of the requirements in IFRS 15. These amendments do not change the underlying principles of IFRS 15, but clarify how those principles should be applied and provide additional transitional relief. After the issuance of IFRS 15, it has replaces many standards regarding revenue recognition, such as IS 11, IS 18, IFRIC 13, IFRIC 15, IFRIC 18, and SIC 31. The following part will be described by my fellow team member, Tamanna, so I'd like to give her the lead. Thank you very much, everyone.
Assalamu alaikum. This is Tamanna, Tinni, ID 23181. Now we are going to explain the areas where application of IFRS 15 is required as well as the exceptions of this. An entity shall apply the standards to all contracts with the customers except the following. These contracts within the scope of IFRS 16 leases, contracts within the scope of IFRS 17 insurance contracts, financial instruments and other contractual rights or obligations within the scope of IFRS 19, 9. Financial instruments, IFRS 10, consolidated financial instruments, IFRS 11, joint arrangements, IAS 27, separate financial statements, and IAS 28, investments in associates and joint venture. Non-monetary exchange between entities within the same business to facilitate sales. Now, the next slide. Now, the steps that is followed for revenue recognition. First of all, identifying the contract with the customer. Then the performance obligation is identified. After that, the transaction price should be determined. Allocating the transaction price to each performance obligation is the next step. Following this, when a performance obligation is satisfied, the revenue is recognized finally. Thank you all.
Thank you, Tinni. Good evening, everyone. I'm Navid Farabee, ID 168. I'm going to briefly discuss each step of the 5-step model for revenue recognition. In step 1, we have identified the contract with the customer. According to IFRS 15, a contract is an agreement between 2 or more parties where enforceable rights and obligations are present. Depending on the laws of the economic environment in which the contract is being made, a contract can be either oral or written, but whatever it is, it has to be enforceable. IFRS 15 also dictates when and how to combine multiple contracts into one. Modifications and adjustments to a contract also falls under IFRS 15. Step 2 is identifying the performance obligation. Performance obligation can be separated into 2 streams. One is distinct good or service, where the good or service is obtained for a single time. The other one is series of distinct goods or services, where a series of specific goods or services are obtained over time. For example, hiring an accountant to check the books on a monthly basis during the entire year. Performance obligation can be of 2 types. One is explicit, meaning the obligation has to be clearly stated in the contract. The other one is implicit, which is based on the common standard practices or policies of the explicit obligation. For example, providing an accounting service to a firm is explicit obligation, but providing the services through legal ways are implicit. The most important part of this step is to remember that if no goods or services are to be transferred to the customer, there cannot be any performance obligation. Step 3 is determining the transaction price. Transaction price is the expected amount of consideration for promised goods or services. It can be variable or fixed. Determination of the transaction price and the position of variability depends on the following elements. Variable consideration is present if it is directly declared in the contracts. If constraining estimates are present in the variable consideration, it also affects the main amount of transaction price. Existence of significant financing components such as discounts, sales, impacts the transaction price. Non-cash consideration may also value depending on the context of the economic environment. Lastly, if the consideration is payable to the customer by, let's say, vouchers or coupons, the main transaction price will be impacted. Step 4 is allocating the transaction price to the individual performance obligation in the contracts. I'm going to explain this step through an example. Suppose a store is selling a pair of shoes at 100 taka and a pair of socks at 20 taka on a normal time. During a special sale, the shop is somehow offering the shoe at 100 taka with a free pair of socks. The socks truly are not free for the sellers, and they have to recognize their revenue, which is carefully hidden. Let's say if the shop sells the shoe at 100 taka on the first day and tells the customers to come back on the second day for the socks, the shop will recognize 83 taka as revenue on the first day and 17 taka as revenue on the next day, despite receiving the 100 taka on the first day. Step 5 is recognizing revenue when performance obligation is satisfied. How the satisfaction is achieved can be disclosed in 2 ways. First, one has to ensure the goods or services has been delivered. Second, the control of the good or service has to be transferred. Without the 2 processes, performance obligation cannot be fulfilled. For when the performance obligation is satisfied, there are also 2 streams. First, the performance obligation can be satisfied over time, for example, service of an accounting firm over the year. Second, the performance obligation can be satisfied exactly at the point of the delivery of the good or service, for example, buying a shoe. For the next part of the presentation, I'm inviting our next member.
Hello, am I audible?
Clear.
So I'm Mohammed Najmul Hossain, ID 23159. So as mentioned earlier, IFRS 15 have been added in our financial reporting environment. We try to find out how well cement industry comply with the provision of IFRS 15. In our compliance report, we included 7 listed cement companies. We investigated the revenue recognition section of the notes to the financial statement of the annual reports. For our compliance,
সাউন্ডটা অনেক আস্তে আসতেছে একটু নাও সাউন্ড করে নাও
can you hear me now?
It's fine now.
In our compliance, we included the 7 listed cement companies. We investigated the revenue recognition section of the notes to the financial statements of the annual reports. For our compliance checklist, we categorized the firms complied if they mention the 5-step model in the provision. With the first firm, is Confidence Cement Limited, they have showed a description in the revenue recognition. Did not articulate whether they have applied IFRS 15 in the reporting. Although they have mentioned the revenue is recognized when the goods are delivered, yet it was not clear enough to score about their compliance. The second company is Aramid Cement Limited showed the ISS and IFRSs they have adopted in their reporting. IFRS 15 was mentioned in the list. Later, in the revenue recognition section, they have confirmed the application of IFRS 15. Besides, they have mentioned the 5-step model of IFRS 15. Another company is Mehnaz Cement Limited. They have articulated the application of IFRS 15 in their financial state. Besides, they have mentioned that IFRS 15 was replaced by IS 18 and IS 11, which was previously practiced. In the subsection, they have showed the 5-step model required by IFRS 15. Bangladesh Limited was very unclear about the revenue recognition principle in their financial system. They haven't mentioned about IFRS 15, although they have mentioned about the performance obligation. Company Crown Cement, they haven't mentioned about the application of IFRS 15 directly, but we categorize them as complied since they have showed the 5-step model of IFRS 15. Second last company, which is Premier Cement Limited, they have clearly articulated the usage of IFRS 15. Besides, they have mentioned in the section that they have been using IFRS 15 since financial year 18-19. The revenue recognition section, they have showed about the requirement of IFRS 15, as always, showed the 5-step model of IFRS 15. The last company we investigated was Heidelberg Cement Limited, Bangladesh. They have ensured application of IFRS 15 in the notes to the financial statements, although they have made a slight mistake by projecting that standards were adopted by ICAB, as you can see that. The revenue recognition system, they also showed the 5-step model of IFRS 15 as well. To sum up the discussion on the compliance of IFRS 15 on the cement industry of Bangladesh, for Confidence Cement Limited and Lafarge Bangladesh Limited, we check other 5 firms as complied as they meet our predetermined criteria. Presenter will have a comment on the discussion report. Thank you.
Thanks to my teammate for giving me the floor. Now I will be discussing about the adoption of IFRS 15 Bangladesh. This is Arif Rafi, ID 22258. As you all know, FRC, also known as the Financial Reporting Council, have been working as the regulatory body who are dedicated in setting the required accounting standards. FRC adopted IFRS 15 regarding the financial reporting and made it mandatory for all the companies reporting relating to revenue from contracts with customer, which was applicable for a period beginning on or after 1st January 2018. Next slide, please. As we have worked on cement industries of Bangladesh, we have found proper implementation and disposal of IFRS 15 in companies' financial statement. We found the scenario satisfactory. Upon review of audited financial report of selected companies, and we are hopeful that the practice to be followed by other companies in other industries. So as much as the scope and demand of precise financial reporting is going to protect the interests of stakeholders, we are expecting the regulatory body to step on bigger paddle to ensure several implementation of required standards in financial reporting concept. So that's all for my part and my team. Thank you.